From the trading desk of dailyforex.com, this is Christopher Lewis looking at the October 29th Forex session. You can see we've just crossed over into it at GMT. And in this particular pair, this is the euro dollar, you can see that we have stalled out over the last several sessions after having a nice move higher. That, of course, makes sense. It's been relatively parabolic. We had a little bit of a rest here and then shot straight up over the course of several sessions. Now, looking at this pair, what I suspect is that the 138 level will be a little bit of a equilibrium for the short term because it is a non-farm payroll week, and the later we get into the week, the less likely we are to see any type of significant move. I believe that we may pull back a little bit, but 137 is probably about as low as we can go in the short term, unless, of course, something major happens news-wise. But right now, it looks like that's probably going to be a floor in the market. So if we get a pullback to 137 between now and non-farm payroll Friday, I would be interested in buying a supportive candle. Would not surprise me though if this market, like much of the forex markets and stock markets, everything will probably be fairly quiet because the entire world is focusing on the Federal Reserve and whether or not they will have the ability to taper off of quantitative easing. Right now, it doesn't look likely, and to be honest with you, I'd be really surprised if the jobs report was so strong that it would warrant a move in that direction. I think we're going to continue to have pretty mundane numbers, malaise-like numbers, really coming out of the United States. Don't have a particular number picked, but I would say it really wouldn't surprise me to see about 200,000, maybe 175. That's not enough to get the Fed to move. So I think ultimately what happens, we may get a little bit of a pullback in the short term, but this pair really should continue higher. I still think we go to 1.40 over the course of the next couple of months.